Hi everyone, and welcome to this week's analytical live stream from Exness. I'm Michael Stark, Financial Content Leader, and here we're going to be looking at some of the important upcoming events this week, analysing some past events, notably what's happened to gold and silver lately, of course, and there should be plenty of time both throughout the stream and at the end to answer any questions that you might have. So I would welcome you, firstly, and let's check the chat. If you have any issues with hearing, whether the sound is not clear or there's no sound at all, please say so. And just drop us a comment at the beginning saying where you're watching from. And also at any time, if you have any comment about what you would like to analyse, anything you would like to discuss, any general questions that you might have that are relevant, happy to answer them at any point. And we'll be here for an hour or possibly a little bit longer if that's what's needed. So let's look at the chat. MX Emma says, welcome boss, thank you very much. Thank you also for being here, MX Emma, thanks for joining the stream. And a bit further down, Islavath Auday says, hi Exness, hi Mr. Auday, welcome. Mr. Auday says, can you please provide one PC? I'm struggling so much because of my PC. Unfortunately not, Mr. Auday, we can't give you a PC. I mean, usually when you're using a computer, it doesn't really matter too much what the hardware is that you have. for trading anyway. It usually just matters what the internet connection is like. But I'm afraid in either case, there's nothing really that Exness can do about that. We just provide the platform. We're a broker, so we can't get you a PC, I'm afraid. Mr. Day says, can you please provide one PC? I'm struggling so much because of my PC, and as well, I'm your client for a very long time. Yeah, well, thanks for staying with us for a long time, Mr. Day, but I'm afraid we can't buy a PC. I mean, if you meet certain conditions, you can get a VPS, which can mean that you get a better connection. You can read a little bit more about that in the client area. There should be a tab for VPS, but we can't buy a PC, I'm afraid. I mean, if it helps, many of the computers that I've traded on in the past have been pretty basic. You just need a moderate amount of RAM, pretty small amount is fine, a tiny amount of storage space, and some fairly basic processor to be able to run MT5 and to be able to run Exness's web platform. You know, problem with RAM in some browsers, that's true, but we just close the other tabs and usually it's fine. So sorry about that, but I mean this is not the area of business that Exness is in. We're a broker. We can't give you a PC, I'm afraid. Joyce Kitao, welcome back, Mrs. Joyce. Nice to have you here once again. Joyce Kitao says, hello, Michael, streaming from Nairobi, Kenya. Welcome back, Mrs. Joyce. We will certainly be analysing gold, and it's nice to see you again once again, Joyce. Thanks for joining us for the stream. So if anybody has any questions, thanks very much for joining us. If anybody has any questions, please by all means add the questions to the chat, and we should be able to have plenty of time, I think, to get to all of them. Oh, when is Kojo going to be here? I'm afraid I don't know offhand. Somebody will certainly ask that. Kojo will be here, I think, on Wednesday. Maybe he might not necessarily be here tomorrow, but he'll be here. If not tomorrow, then hopefully next week. Kojo will be doing a stream. And if you subscribe, you turn on notifications, you should be notified immediately as soon as Kojo is doing his stream. And you can join in for that. So firstly, let's look a little bit at the personal area of Exness. If we're signed into the personal area of Exness, we can see on the home our accounts, and I would just stress that this is a demo account, so all of the analysis and all of the sample positions that I'm putting here are made on a demo account, not a live account. These are not recommendations to trade. Nothing of what I'm saying here is a recommendation to trade, not trade, or do anything. Please remember that any decisions you make are at your own risk. Trading is risky. You should always do your own research and have a strategy to manage risk. So just to stress, this is a demo account, not a live account. We're not doing live trading with real money here. So if you go to the left tab in the personal area of Exness, and you find this area here, analytics or analysis, and you can see analyst views is the first sub tab under there. And you can see these various ideas that you get from Trading Central. We don't actually want to click trade, sorry. And it gives you an idea for various different instruments, mostly focusing on Forex, but also you can get indices, you can get commodities, metals, and other things. And it gives you their preferred direction. This is where they think the price is going to move, and the possible target that they think, and where the support might be, and the alternative scenario for what might happen if the price goes against what Trading Central expects. So this is something that you can use with caution, but it's something possibly that you can use and integrate with your strategy. Then if you go to Market News, which is again under the same tab of analysis, you can find news again from Trading Central and FX Street, which covers most of the main currencies, most of the main Forex pairs that we usually typically look at within CFDs, and various other things besides. You click on any of these articles and you can read more detail about that there. And you can also see the full details if you click on the side part. And Exness's economic calendar, we've also got a link to the economic calendar. So as I was saying last time, really exciting times that Exness's economic calendar has been updated. Of course, there's more work to do in some aspects, but it's definitely way more usable in my personal opinion. And it's just generally like a lot better than it has been in the past, because now it's also integrated, it's integrated functional filtering for various different time zones, periods, countries, importance of the news, and of course the type of event, whether it's economic calendar or it's a holiday. And we can see also the actual release when it's come out, what happened before, and what is the forecast release. And there is also a chart. If we click on the button with the chart, we can see the chart of the past releases. So that's a great improvement. Shout out, congratulations to the web team who's been working on that big improvement compared to the previous calendar. What we'll be doing today though is we'll be looking a little bit more closely at Trading Economics' calendar. There's a couple of reasons for that. Primarily, the reason is that we can get more links and more context to various different related markets within one place. and also because we have a broader variety of events which might affect trading in various different ways, as opposed to simply the specific instrument that we're looking at. But Exness economic calendar available from the client area just by going into analytics. So what we've got, Joyce Gatow asks, who's manipulating gold and silver? That's a great question. Let's start with that, and then let's move on to the main part. I think, and I would stress this just my personal opinion, Joyce, I don't think anybody's manipulating it. I know that we have read some theories, that some of them would call conspiracy theories, about how the American government wants to sell off gold at a high price. This is what's caused this, because it wants some way of refinancing or recapitalizing itself given the very large national debt. I think that may be, I mean, there's various different iterations of that idea. I think that may be is a little bit too positive as to the collective intelligence of the American government, perhaps. I know I always say I don't want to talk about politics. We kind of have to talk about politics in this context. I think to some extent, Mrs. Joyce, it's just kind of a normal reaction to when the price reaches this very significant high, and a lot of traders are looking for some kind of way out, especially professional traders, but also retail traders like you and me. They're looking for a way out when the price gets to a certain notable new high. So I'm questioning personally to what extent it's manipulated. But I mean, where's the evidence for that? It's a good question where the evidence is coming from that. But I mean, if you take Exness's volumes, for example, and compare with the volumes of like 3, 4, 5 other major brokers of CFDs, you can see that there is a spike in actual volume. And I would stress, of course, that the volume, when you're looking at this chart of Exness's CFD on gold versus the US dollar, the volume means it's only for Exness in that period. But when we take the balance of various other brokers as well, it does seem like there's a huge amount of activity. I don't think the market is necessarily being manipulated. So if somebody is manipulating it, it might be governments. But I'm highly questioning of that narrative. I might be wrong, it's just my opinion. I don't personally think it's being manipulated currently. But thanks for the question, Joyce. I think it's good to discuss these topics, even though we might not necessarily always agree with each other. And Daughter of African says, hello, following from Nairobi, Kenya. Welcome, Daughter of Africa. Thanks for joining us. So we'll certainly be coming back to gold and be doing a little bit more analysis, well, a lot more probably, analysis of gold later in the session. But firstly, let's just look a little bit at some fundamentals, right? So, I mean, overall, we've seen there's been this massive sell-off for gold and silver, and then today, and to a lesser extent yesterday, they've bounced so far reasonably strongly, right? And one of the primary factors behind that has been the nomination of Kevin Walsh as the next chair of the Fed, the nomination of him by President Donald Trump. So one of the primary factors that initially sent gold and silver down is that he's widely regarded as being, if not necessarily more hawkish, then at the very least less dovish compared to Jerome Powell. And compared to what the expectations might have been for who Donald Trump was going to appoint. So what you can do is, if you want to read a little bit more about this, you can read a little bit more about Kevin Walsh. You read a bit more about his background, how he served as one of the governors in the Fed in the past. Then he quit over the dispute, let's say, about the degree of monetary easing that the Fed was introducing roughly about 15 years ago, approximately during the main part of the global financial crisis, and so on and so forth. I'm not sure that this stuff is too relevant for us as traders, but if you want to read more about it, of course, you can read more about it pretty much anywhere you want online, any reputable source. And I mean, I suppose basically one of the key factors there is that with Kevin Walsh as the likely, let's say, replacement for Jerome Powell as chair of the Fed, then it just looks a lot less likely that we're going to have Donald Trump's stooge in charge. To put it kind of bluntly, because some of the other candidates, markets might have expected that they would be happy to yield to pressure from the government to cut rates, even though that might not be the best thing to do for the economy. Whereas with Kevin Walsh, it seems at least slightly less likely that he's going to do that. What is he actually going to do if he becomes chair of the Fed? We don't know, of course, yet. We're just basing this on probabilities and likelihood. And of course, I would stress that he's not actually the chair yet. Jerome Powell's term doesn't expire until May, and politically there is a significant, I would say, degree of opposition to the appointment of Dr. Walsh, in that many many senators, representatives, are not necessarily opposed to Dr. Walsh taking over, just opposed to the manner in which it's being done. Since we've been talking a lot this year, and I suppose at the end of last year, about political pressure on the Fed to cut rates, lawsuit being raised against the Fed about the renovation of its headquarters and so on and now. Is this politically motivated and so on and so forth. So this is one of the key developments that we had on Friday. But as I say, I just think that that's overblown. I think that's overblown. I don't think this is necessarily an enormous factor that really dramatically changes the fundamentals. I think to some extent this is a normal situation. We see a fairly sharp correction. It's debatable whether you would call it a retracement or a correction, but we can debate that later. This kind of sharp downward reaction, let's say, on reaching a new high when we've had such a long-running, strong uptrend, that's a normal situation, technically speaking, from technical analysis, right? So I'm not really sure that that's an actual narrative. I suppose it's just an excuse for a sell-off in gold. And we can see overall that we don't have any massive change in what's expected for the Fed for this year, right? So let's cover this and let's look back at the economic calendar shortly. This is the same situation that we have as before. Pretty likely to have a cut in June, although it has slightly gone down. I would stress the probability of a hold has gone up slightly since about a week ago. It's gone up by roughly about 8%. But the significant change, I think, since around this time last month, or let's say the end of last year as well, is we're definitely not expecting a cut in April. Definitely expecting the next cut for now at the earliest to be in June. And also for the moment we're generally speaking, expecting there to be 2 cuts. Most likely scenario, although the probability of 2 cuts has gone down slightly as well. 2 cuts overall in 2026. I just think maybe it's a little bit too speculative to be looking this far ahead. Looking ahead all the way to December, and currently we've only just come into February, it's too far. I don't think we can meaningfully try to project that far ahead. Or if we do try to do that, then we just want to, I think, have some kind of general awareness of what's the more likely and the less likely probabilities, basically. So that's that. I think it's just a fairly normal reaction to what's been happening on the chart with gold recently. So let's go over some of the important releases for this week. So let's see what we've got in the chat. Dude7741K says kindly provide UPI payment system for Indians. I'm afraid that's totally out of my control, dude. There's not really anything that I can do about that. I can pass it on to the payment team, but if they don't currently provide that, I would imagine there's probably a specific reason that they don't provide it. Let's see. I could certainly look into that for you and maybe get back to you if you're here in another live stream. But I would imagine, unfortunately, if it's not currently provided, there's probably a reason for it not being provided. Might be related to regulation or something else. I honestly don't know. I couldn't give you the answer to that. But that's something I'm afraid out of my control. So welcome to ask questions about payments. I just might not have the right answer for you, I'm afraid, because that's not my area. Better to ask a question about trading or about analysis or about what's going on in markets or news or economic data, etc., etc. Whereas for payments, I'm not really the right person to ask, I'm afraid. But thanks for your question, dude. Thanks, dude7741, for the question. Anybody has any other questions, please by all means drop them. Just bearing in mind, some of them I might not be the best person to ask. I might not be able to give a very good answer. So what have we had so far this week? We've had Chinese rating dog PMI. I mean, it's not a super important release, but it's moderately important. Coming in as expected yesterday. We've also had ISM manufacturing PMI coming in actually very surprisingly positive. That, I think, so far this week has been the biggest surprise that we've seen from major data in markets. That's way, way better than expected. 52.6. But we've been expecting there to be a moderate, small contraction in this manufacturing PMI, but actually, considering the circumstances, reasonably strong expansion. So that's a big surprise. That, I think, is quite a significant surprise, and that's something that possibly is going to have an impact on inflation, because usually when we start seeing PMI go up like this, I mean, it's obviously a bit too early to tell, is this going to be a trend? And I would also stress that in December, the previous month, it's not great. 47.9. It's not a huge contraction, but it's a contraction. It's not a great release. So that's a really big positive surprise, might have some positive impact on inflation. Positive, I mean driving inflation higher. So that's something I think we want to continue to watch. That kind of fairly big surprise, more than 4 full points above the consensus for PMI, this means I think we probably want to be watching PMI maybe a little bit more closely in the near future. And another significant event, but not a surprise, was the Reserve Bank of Australia's raised its cash rate. So, I mean, you might think that, and I actually also thought that was a little bit surprising. I'm checking last week and seeing it's likely to raise the rate to 3.85%. It doesn't seem to make that much sense in the context, given that pretty much all the other central banks, apart from Japan obviously, are either in a cycle of cutting, have a paused cycle of cutting, or have recently completed a cycle of cutting. So it just seems a little bit strange. But I mean, the rationale behind it, I think, makes some sense. Pretty low unemployment, labour market overall doing pretty okay, inflation remaining relatively quite high, and they want to try to do something to take it down. And also, I mean, property market in Australia, as you probably know if you read the news, then I mean, there's various kind of issues there. They might want to raise the rates to help that to cool down a little bit. So that's something quite important, and we'll certainly look later, hopefully if anybody's interested we can look later at Aussie dollar against US dollar. So coming up within the next few days, some of the most important ones, we've got inflation from various countries in the Eurozone and Eurozone wide, and Thursday's a very big day this week because we've got both the Bank of England and the European Central Bank meeting on the same day. Neither of them expected to actually do anything in terms of changing rates, but it's a very, very important event, very important day since both of them are meeting in quite close succession. So I'm going to be watching quite closely the press conference afterwards to see what is the possible trajectory of these rates. Is there any indication as to Bank of England, when it's going to be cutting next? I mean, it seems to be, I think, pretty likely, but not certain by any means, that there will be a cut in March. So if we get more hints about that, markets start to price that in a little bit more, then that's something that possibly could affect the pound negatively. Whereas if that's backtracked to some degree, then it might be positive for the pound. Overall, we're looking at 2 cuts, most likely anyway, 2 more cuts from the Bank of England for this year. Whereas ECB is very, very unlikely to be doing any more cuts in the immediate future, at least. It's possible this summer that we might get some changes, but it seems unlikely since the board of the ECB has repeatedly stressed patience, data dependence, and so on and so forth. And the main event for most traders this week is, of course, the NFP, which is coming out on Friday. And we have the Canadian job report and the American job report coming out at the same time, which is a fairly common occurrence. So we can expect that the dollar loonie is going to be very, very active around then. Very, very active around the joint release of the job report. And I think, as I've been saying in these live streams, I suppose for a while now, but let's say it again because I still think this, these data are generally a bit less reliable now, both for total non-farm and to a lesser extent for unemployment rate, because we had longest government shutdown in history. And I mean, overall, they're still trying to catch up in terms of the revisions. And overall, I think also before the shutdown, before the government shutdown in last year, around September, October, we already had significant unreliability in the data, and we had the data quite strongly revised down for late spring, early summer of last year. And overall, it looks like, as the Fed was saying last week, yes, it seems like job market is stabilising to some degree. Still isn't looking fantastic. It's certainly looking more negative or less positive, depending how you view it, compared to around this time last year. So I think NFP is really important, just more difficult, I would say, than usual to predict. We might not get a very big surprise because, of course, last month, in January, we got a really minimal surprise. Actual was 50,000 compared to consensus of about 60,000. Not much of a range in terms of the estimates, which we've got a little bit more of a range in terms of the estimates, 30,000 approximately, as opposed to about 15,000-ish last month. So let's see what happens. As usual for the NFP, you want to try to stay calm, evaluate, analyse in the run-up, and then once the release comes out, in my opinion, then actually see what it looks like and then trade on that basis. So let's look at the chat. Joyce asks, what's your take when volatility is so high? I think the simple answer is, for me, just wait. Wait for volatility to go down a little bit, and then once things become a little bit clearer, actually do something.
And I realise, of course, Joyce, you might say, or somebody else might say, that's boring. Well, yes, that is boring, but sometimes boring is okay. Boring can save you from losing money, or it has certainly in the past. Boring has saved me from losing money. So I think sometimes it is a good idea to stick to being boring. But also, I would just say that depends how you measure volatility, but if we're measuring volatility based on ATR, average true range on the charts, yeah, gold and silver, I wouldn't touch them for the time being. But overall in markets, volatility is really not that high. If we're measuring overall using the VIX, the volatility index of the S&P 500, it's a good kind of gauge or like rough measure of overall volatility in markets, although it does focus on stock markets. Volatility is not super high. I mean, it's in the zone of not necessarily complacency, it's not below 15, but it's definitely not by any means in the zone of extreme fear or extremely high volatility. So, I mean, one approach that I personally like to use in this kind of situation when we see ATRs this high, maybe we can make that a bit clearer, can we? Just give me a second here to make that slightly clearer. Let's take a lighter colour than that. Yes, okay, that's good. When we have, ATR here is basically at the record high. I don't think we've ever had an ATR this high for gold. That's certainly not that I can remember. Don't think we've ever had an ATR that high. So what does that mean? That means for me, just don't trade this for the time being, because it's very, very difficult to find a reasonably good stop. It's very difficult to avoid any losing trades, losing too much of the account as a percentage. So just trade something else. Trade oil, trade Bitcoin, trade Forex, trade indices maybe. Trade something else apart from gold and silver. That's my take. But if you insist on trading gold and silver now, which I'm not sure is a fantastic idea for various different reasons. I know I said that 2 weeks ago, but I'm saying it again. I don't think it's a fantastic idea, in my personal opinion, for a few reasons. But if you insist on trading it, just try to keep constantly aware of what's happening, and use a trailing stop. In my opinion, I think is very good approach when volatility is quite high, and try not to plan too long term. Because right now, okay, we've got a fairly successful so far ongoing bounce today, absolutely true, but it's quite easy for that just to turn around and for it to go down. Because if you're looking at the overall the picture on the hourly time frame, I know it's a fairly low time frame, but still, if we're looking at the overall picture here, right? Okay, maybe we're not going to be pushing it immediately-ish back below 4,500. No, perhaps not. But I'm not sure that buying here is really going to be a great option for loads of different reasons. So we can give some options later for what I might do if I were to have to buy this, which I probably wouldn't. But I mean, overall, I think when you've got really super high volatility for example, this for gold, then you switch over to euro-dollar. Volatility is high, it's just not such an extreme high compared to gold, right? So that's just my take. Hopefully that answers your question to some degree. We can discuss gold in more detail, of course, later, Joyce. DNA Pips FX says hello, following from Nigeria. Welcome, DNA Pips. Thanks for joining in. Trade with Apia says hello, following from Ghana. Thanks, Apia, for joining us. Hopefully have a good session. If you have any questions, DNA Pips FX or Trade with Apia, please by all means ask. It'd be great to have questions that we can answer. Makes the session, I think, more fun. Well, it makes it more fun for me anyway, but hopefully it also makes it more fun for you. Depends obviously what I'm going to say. Not all of the questions can we actually answer, but I do what I can. So coming up this week, we have some fairly important earnings. AMD obviously is not super important compared to something like Nvidia, but it's a moderately important release of earnings. Various major Japanese companies are also releasing their earnings. Alphabet, of course, a critical release for various indices. Eli Lilly, also quite an important share, maybe not one we would trade individually, but it's a fairly important constituent. And for the FTSE 100, we've got Shell and Unilever, two of the biggest constituents. And Amazon, also a very important individual share. So I would say overall, we've got pretty big week of earnings. And I mean, broadly speaking, maybe let's not be too general here, but broadly speaking, I think things are looking moderately positive in terms of the consensus for EPS. Some companies more than others, but overall, most of the major-ish companies that were actually relevant for us as traders of CFDs, we're looking at least some degree of positivity, right? So that might mean that there's some impetus for indices to push higher. I think based on the charts, which we'll be looking at shortly, hopefully, that maybe seems to be more questionable, but that is one possible factor that we're looking at there for these various earnings reports. And what have we had so far this week? Disney's done a little bit better. I mean, of course, like it's done a little bit better than the consensus, but it's generally not doing fantastic, of course, right now, Disney. So, I mean, if we're stuck with deliverable shares on that, we're stuck with deliverable shares on that. I mean, equally, perhaps, finding a sell for Disney, I think is perhaps questionable, let's say. But really, yeah. Oh yeah. All right. Sorry, forgot I said anything about that. Sorry, yeah, no, don't even have Disney as an individual share, which is actually probably for the best because I'm not sure you can get any great opportunities for it. So in general, like moderately positive earnings, right? So some more questions. Kalibala Jolly says, please buy for me a laptop. No, I'm afraid we can't do that. I mean, speaking for Exness and speaking for myself, I'm afraid Exness is a broker. We can't buy a laptop. So, I mean, if somebody wants to buy Kalibala Jolly a laptop, I suppose you could contact this person and buy them a laptop, maybe. Yeah. So anyway, it's not really relevant to the stream. So anyway, Ignorance YT says, "Hey man, hi Ignorance YT, welcome. Thanks for joining us. Not sure whether you're talking to me or the person who wants to buy a laptop." Yeah. Do you just talk about the market, or do you speak on financial advice? Just talking about the market, no financial advice. I mean, I give my opinions about some things, but that is not financial advice. I'm not a financial advisor. Exness does not provide financial advice. It's meant to be an informative stream about markets and about what's going on. We're not giving any financial advice. I mean, you can ask a question, and we can, I or Andreas or Kojo certainly, can try to answer to the best of our ability, but we can't give you advice, I'm afraid. Anything that we say is needs to be tailored to your own personal circumstances. And remember, of course, trading is risky. But thanks for the question, Ignorance YT. Yeah. So let's look at a few charts. If anybody has any questions about what specific instruments you would like to look at, that would be great. Or if you would like to look at any other specific fundamental factor, that would also be wonderful. Because of course, that way you can cover things that are more interested to you if you ask a question, and hopefully we make the session more fun and engaging. But I think in principle, we'll look at gold, we'll look at some of the Forex pages, we'll obviously look at Bitcoin and oil and silver, and if there's anything else we want to cover, then by all means, let us know. So, Ignorance YT says, then I have 2 questions. Then please shoot, yeah, give us your questions, Ignorance YT, and I can certainly try to answer them. Can't promise that I'll get you the best answer, but I'll certainly try to answer them. And Originals FX says, what's your opinion on Euro Yen and Dollar Franc? Yes, let's look at that. Euro Yen. That's not something, honestly, that I've looked at in quite some time. Haven't looked at Euro Yen for quite a long time. But I would say broadly, essentially in line with many of the other pairs that have the yen in them. I'm not sure that I'm desperate to buy more. Because, okay, pound yen lately has been doing a lot better. That's true. And I mean, that has an element of positivity to it, certainly. But also dollar yen has been doing quite a lot better. And we've been discussing, of course, quite extensively in the last few weeks that it looks like 160 for dollar yen is the area of a possible or maybe even likely intervention by the Bank of Japan, possibly Japanese government as well. So we maybe don't really want to be, or I personally, let's say, don't really want to be like jumping in too hard for a new buying position when we're very close to the tops, and there's like, I think at least a reasonable possibility that there's going to be an intervention of some sort. Because it's a little bit difficult, I think, here to find a reasonably good target. What would you do to find a target? I think you possibly could use a Fibonacci extension. That's what I might actively consider doing, but I think I would be more likely probably just to eyeball it. Because Fibonacci retracement, I'm not sure that's necessarily going to be very helpful here. It might be, or it might not be. Because if we want to try to set up a Fibonacci extension, man, it looks absolutely horrendous on this platform, doesn't it? But I mean, it is what it is. Can we ray these right, please? Yeah, okay, thank you. So yeah, if we're thinking about a buy for dollar yen, which I think is probably logically what you would do if you're thinking long term, then yeah, I mean, obvious target would be about 194-ish. But I think the big question is, who asked that? Originals FX, yeah. The big question, I think, Originals FX, what's going to happen with dollar yen in the meantime? So I'm not sure necessarily that this is one of the best ones to be going for, but let's try it. Let's see whether we can find a reasonably good ratio. So if we're going for a buy market, which I think is also kind of questionable, maybe we want it to be a little bit lower, then a fairly tight stop if we go for around 180ish. But let's try it. Why not? And let's see what kind of ratio we come up with. Just I would remind you, this is not live trading. This is a demo account. This is for informational purposes only. It's just kind of to give a rough idea of what the approximate process might be here. So it gives us an okay ratio. One of the main reasons that I really don't like that trade personally, not saying that it won't work, I'm just saying I don't like that trade at all, is that if dollar yen starts moving significantly back up again and maybe it tests the area around 160, then we can probably expect some degree of nervousness in markets. We can probably expect people to be saying, okay, this is there's possibly going to be an intervention here. But broadly, I certainly wouldn't sell. Certainly don't think it'd be a great idea to sell this for a variety of different reasons. Don't think that's going to work. Just as a question of finding a reasonably good entry with a good ratio, which I think is kind of challenging right now. Originals FX is pretty close to the top, So I know that's not a very useful answer, but I mean it's an answer at least. I mean, and if paradoxically, perhaps what I probably would go for is if I was going to be selling the yen, probably would go for pound yen, depending upon how the Bank of England's meeting is received. Because if there seems to be some confirmation on Thursday this week, Bank of England is going to be cutting rates next month in March, then that maybe gives us a good entry. For me, it might give me a reasonably good entry. Because maybe it's going to move down at least slightly intraday to below 210, I would guess, and that gives me a possible opportunity to be buying in, especially if we consider that the previous high, that's from hold on a second, sorry, it's far too high a time frame. If we consider that that was one of the previous highs anyway, around 208ish, was that? Where were we? Sorry, just give me 1 second here to find where I was. And also think about that. I'm not sure whether that's really a great option. Yeah, about 208ish. Maybe 208.50 to flips into being a support, and maybe it doesn't if it's only done that once. So I think it's kind of questionable. But I mean, one of the reasons also, right, last point on this one, sorry, and then moving on to dollar franc, one of the reasons also why I think this is maybe a bit more favourable is definitely not overbought. Whereas other pairs with the yen, they have some degree of saturation, which is maybe makes you want to be a little bit more cautious. It's almost exactly neutral. The slow stochastic is very, very close to neutral. So I mean that's one factor I think in favour. We don't have a significant drop in buying volume. So I mean if it was a free choice, I would definitely prefer pound yen over euro yen for the moment. But that's just my opinion. Originals FX. You don't necessarily need to agree. It's not advice. It's not a suggestion to do anything. This is just my personal opinion. And for dollar franc, I'm definitely feeling at least moderately positive, and I'll explain why. Because we have this over the last period, like let's say last week and the week before, we have some kind of nervousness around conflicting messaging about whether the US government can tolerate a weaker dollar, and we have this kind of debate and intrigue to some degree over the replacement of the Fed's leadership and so on and so forth, right? But if we just restrict to I think we can say fundamentals are broadly mixed. Broadly speaking, fundamentals are mixed, right? With some exceptions. But given so far the strength of the bounce, having reached this new low around 76ish, right? The strength of the bounce suggests to me, at least, that maybe we're not heading for a new downtrend. We might be just moving back into the range. That's one possibility, because we've had a pretty clear, close to textbook example actually of upward crossover of slow stochastic in oversold, and the counterpoint to that, yes, is that ATR is really high. ATR has gone up a lot, and often when you get a significant change in ATR, that can indicate that you have a new trend. I just don't think I would rely on that alone. I think I'd want to wait to see what happens around the NFP for determining a longer term direction. And again, I know it's a bit of a boring approach, don't deny that, but sometimes boring can be successful. Because of course if you're buying here, you're going against this pretty obvious, I think, downtrend on the higher time frames. Yes, that's true. On these higher time frames, of course, you do have a downtrend for dollar franc. That's absolutely right. I just wouldn't really, in the current circumstances, want to be going in for a very long-term trade here. And I think the other question as well is, let's just bring this back for a second. The other question as well is, right, if you're going to be selling this, what's your target? What are you going to set as your target? Again, you could use Fibonacci extension. It's one possibility. You use the Fibonacci extension to set your target. Yeah, maybe. You could do that. But I mean, I personally would be more inclined probably to go for a buy, thinking it's going to go back to the range. But it's just my personal opinion. It's not advice, it's not a recommendation. And I think in that situation, you might get a reasonably good ratio. Maybe 80 centimes is a little bit too aggressive, but we could certainly go for about 78, which is around the bottom of the range. So if I were to set a target around 78 centimes, I mean, I'm not going to make much profit here. And then we can set the stop roughly around 77.5. I mean, obviously that's crap for loads of different reasons. It's not really going to work. Maybe we need to set the target a little bit higher than that. Let's go for the target 79-ish. Yeah, that's not too bad. Can we even go to 77? Yeah, we don't get a very good ratio here, no, if we go to 77. And it could easily just go outside that, given that we have 684, it's about 1.2, let's call it 1.3 centimes is double ATR. 0.3 centimes. Yeah, so that doesn't work for a variety of reasons. For me, it doesn't work. I don't like that Originals FX, but I would say the bias probably is a little bit more towards buying for me anyway. If you've got another opinion, of course, that's welcome. Give us your other opinion, no problem. Can't really set that much higher than that. Could go maybe up to 79.5. Not mad on that at all. This is a demo account. I would stress this is a demo account. It's not a live account. So that's my opinion. Yeah, I know it's not a very useless opinion necessarily, a useful opinion necessarily, but it's an opinion. Yeah. So Bitcoin and Dow Jones from Joyce. So Bitcoin, I think, firstly is, I mean, if we want to do this kind of possibly counter trend trade and buy, maybe Bitcoin is, I mean, I wouldn't say it's a counter trend trade, of course, to buy something like gold or silver, except on very, very low time frames. I mean, to trade the bounce is what I mean. Then maybe Bitcoin is one of the better candidates because it hasn't moved very strongly downwards, is one important factor, I think. And volume overall, I don't think really obviously supports the downtrend that Bitcoin has been in recently. I mean, recently it's been more or less flat, that's true. But I'm thinking about the kind of overall downtrend if we're looking a bit further back. I'm looking back to like fourth quarter of last year, first half of the fourth quarter of last year, right? I don't think we have any obvious support for volume. And okay, yeah, we've got some of an increase in volume and open interest recently, yes, but it's not nearly the same kind of like spike and flip from buying to selling volume compared to gold and silver, for example. I mean, this is futures, I would stress. Here we're looking at volume and open interest for futures, so that, but I think that's a useful indication for CFDs, although we shouldn't put too much stock in it, because if we're just looking at this big candlestick here, you might think, oh yeah, look at that, like, wow, this is a relatively big up candle, and look at the volume, look at the amount of buying volume. Sure, but we also think I need to compare that to various other brokers to see, you know, what is the probability of it moving up. But overall, I think it's fairly likely to move back up. Where would I set my target? I don't know, maybe about 90,000-ish, I would guess. I mean, previously, like last time I was trading this, you remember, I mean, if you're joining, of course Joyce will remember, but anybody else who's been joining us for the live streams within the last several months, actually, when we were reaching this area here around November last year, I was saying I think it's a lot less likely for the price to push below, clearly below 80,000, the longer it holds above that, unless you've got some kind of strong catalyst from sentiment or from fundamentals. And I think that's broadly right. It's broadly proven to be right. And I think that, you know, this catalyst that we saw late last week about, you know, Kevin Walsh coming into the Fed and significant sell-off, short term at least for gold and silver, it's a fairly strong catalyst. I just think it's maybe a little bit overblown. So that's why I'd probably be feeling a little bit more positive about Bitcoin, because what is the overall change in the fundamentals for crypto recently? Very significant. No very significant overall change. Some change in volume for futures, that's true. Some change in volume for ETFs, yes. But I mean, no, I think overall massive flip in sentiment really here. So that's why I would probably be inclined to expect it to move back to the range. I just don't think I would actually take any trade there right now because once bitten, twice shy. You've made it. If I have made an unsuccessful trade for something, happy to wait until I maybe get a little bit of a better opportunity, before making another one. Although we are at quite a significant new low, and also the counter trend trade overall the trend is downward. Generally not mad on that for a few reasons. So US 30, that is to say Dow. So just let me clear a couple of these charts here so I can actually see what I'm doing. US 30 Dow Jones Industrial Average. Why is that not working? I don't know. Yes, right. I think pretty much the same thing for most other indices, because we were saying earlier, briefly, about indices, like a lot of them, or the main American indices anyway, let's say, are very close to the tops, so close to all-time highs. And I would point out Dow specifically is very close to 50,000, which is a really strong, like obvious psychological area. And okay, maybe we get some positive factors, but we get some positivity from the earnings reports that are coming out this week and next week as possible. I just don't think it's really going to strongly break out above 50,000-ish. I'm just not sure what the driver, the narrative is for that, unless we get some kind of confirmation that the Fed's going to be more dovish. We get some kind of relative stability in American politics. I guess a kind of ridiculous idea at the moment, but you never know. Or something else like that. I'm just not sure what the catalyst is that pushes this up. So for right now, I think for me as a trader, CFD is not really all that interesting. Indices for a while now don't really hold that much interest. If they're like sitting here like fairly close to neutral in terms of saturation, but also very close to the all-time highs, doesn't give us any amazing opportunities to trade. Unless, of course, we get some second round of significant decline for metals, possibly that kind of malaise spreads across into different instruments in a way that it certainly did not over this round. Don't have any significant crash for any indices. So I'd be inclined just to wait and see what happens for that. Whereas Bitcoin broadly feeling positive just might not do anything about it. Yeah. So hopefully that answers your question to some degree, Joyce. Euro dollar, yeah, we'll look at that in just a second. Ignorance Whitey, you have two questions. Please share your questions. Oh, you've got one. Yes, right. Yes, okay, you've got one. So we'll get to that in a second. Yeah. No sound, says somebody. I don't know. Anybody else having an issue with the sound? Might just be your volume, since I realise the volume on this microphone is a little bit low, so I don't think there's much of a way that I can obviously turn it up. Except for speak louder. So anyway, right, so maybe that should fix the issue, just turn up the volume a little bit, whoever it was who said that. And called by 1572, just turn up the volume a little bit, I think. That's what you might have to do. So Euro dollar, and then we'll come on to Ignorance Whitey. Euro dollar says Mugisa Paul Edwin 9134 Euro dollar please. Yes, we can certainly look at that. So recently it's been a lot more volatile than usual, Euro dollar. I mean, we've noticed, of course, the last few days we've had we've had many of the similar factors that have been affecting gold. We've seen, like in the past couple of weeks, we've seen this kind of disconnect between different members of the American government as to their policy on how strong the dollar might be. We've had some debate and intrigue about who's going to be the next chair of the Fed, how obedient are they going to be towards Donald Trump. And so the chart, I mean, broadly speaking, it looks kind of similar to gold. Just the obvious different factor here is that the euro usually is more vulnerable to geopolitical and overall economic instability compared to the dollar, whereas for gold, of course, is the opposite story most of the time anyway. So that's why, I mean, maybe I think there's perhaps less potential for the euro to make significant gains. And I mean, overall, if you just consider the kind of overall like top level fundamental impression without doing any kind of detailed fundamental analysis, it was very, very unlikely that the rate in the USA is going to be even approaching that of the Eurozone within the next couple of years. You know, that we can see, that's what we see now. It was very unlikely until 2028 that you're going to get the two rates approaching at this rate of cutting, the likely rate of cutting. So in most situations you expect the dollar to get significantly stronger. But I mean, that's a kind of a simplistic approach to viewing it. I mean, carry trade kind of approach doesn't always work. So, but anyway, my approach, but my idea anyway for the moment would be based on the chart. It might stabilise around the value area between the 50 and 50 SMA from bands and the 20 SMA. Because we don't have such a clear, I wouldn't necessarily say evidence, we don't have such a clear, I don't know, resurgence, relatively speaking, of buying volume compared to gold for euro dollar. I mean, the buying volume actually so far has not really bounced yet, and also buying volume is pretty minimal at the moment, but I think that might come if the price moves a little bit lower into this value area. And the fundamentals, I mean, since for so long we've had this situation with rates, the price has not shown any really obvious sign of wanting to push it much lower. We're getting some degree of bunching of the moving averages. So, I mean, the overall next main trend might well be downwards, yes. I just think maybe it's a little bit early for that to happen. So, in this situation, and I would stress it's just my personal opinion, it's not a recommendation, I would probably set up a buy limit around 117.50. Finding a target here is a bit hard, that is certainly true. I would probably go with around 119 because it's just a little bit below the upper band of the Bollinger Bands. And I would probably set my stop just somewhere outside that value area, so probably about 117-ish. And we get a reasonably okay ratio. I think that's quite an okay ratio for me, at least. A ratio of 1 to 3 is fine. That's okay. That's good. I'm just not sure whether I would maybe prefer the stop to be a little bit lower than that, maybe align with these two moving averages. Very, very, very narrow value area between these two, but still might want it to be a little bit lower, but I mean I could tolerate that. So it's for the sake of a reasonably good ratio. But I mean, thinking further ahead, if it's more of a long-term trade, I probably would be thinking more about selling. Just for right now until the current situation calms down a bit, and of course critically until we see what's the ECB doing on Thursday, what are we going to get from the NFP on Friday, as we were talking about at the beginning. That's one important factor. So hopefully Mugisa, Paul, Edwin, that answers your question to some degree. Something more specific, please go ahead and ask. So Ignorance YT says, for the average person, is Bitcoin worth investing into, and if so, how much should they invest? Well, this is just my opinion, it's not advice. I think definitely yes, Bitcoin is worth investing into. But I mean, that's not really here what we're here to talk about. Because here on this platform, on Exness, we're talking about trading, we're talking about contracts for difference, which is a type of derivative. We're not investing into deliverable assets. So, I mean, should you trade Bitcoin as a CFD? I think it depends really on your own personal circumstances, depends on your appetite for risk and various other things. So, but I think, yeah, definitely Bitcoin is worth investing into. How much should they invest? It depends really on your age and your objectives and various other things and how easy it is to do it for you. But I mean, I personally put maybe about 5 to 10% of, you know, the overall investments that I have into Bitcoin, approximately. That's just me. Obviously, everybody else is different. Some people put their whole life savings into Bitcoin, which I personally think is a terrible idea. But some people do that, and maybe for some people it works. I just think for most people it's not going to work. That's just my opinion, though, and I mean that's kind of slightly digression. Ignorance Whitey, it's a bit of a digression away from the topic. So I'm just going to give you a brief answer there. It's just my opinion. It's not advice. Can't give you financial advice. Okay. And then Originals FX says, okay, sure, no problem. That means this NFP news this week will set the pace for market move. Yeah, I think so. Definitely. Yeah, I think this is a good point, Originals FX, because I'm just thinking about the context here, because in the context of like last Friday was a bloodbath, like absolute mess. Silver's worst daily loss ever, 26% down, right? So if you've got that kind of situation, you mentioned a lot of people are going to be saying, okay, let's take a break here, let's have a cup of tea, and let's come back to things later, you know, especially if they've made a significant loss, unfortunately. And great, I think, if you've made a big loss on this, anybody, just to like take a little bit of a step back, take a break for a little while, figure out. And also compounding that factor is that usually you would expect that major, like fairly large participants in markets, they're going to be wanting to stay out of large volumes, at least when you've got a major release coming up. And this week you've got several, I would argue you've got 4. I would include the Canadian job report as well. You've got the Bank of England's decision, you've got the ECB's decision and the press conference for both of those, and the NFP, and also the Canadian job report. So I think a lot of people, for Forex at least, and for metals, are likely to be waiting and seeing, you know, what's actually going to happen with this NFP. So that's my take, yeah. That's my opinion. I would agree with you about that. Originals FX, definitely, yeah. You can't be completely safe, but it's better to be relatively safe than sorry in trading, as in many other things. Yeah. So hopefully that. Thanks for the comment there, Originals FX. And Joyce Katao says yes, thank you. That's fine. Yeah, thank you for the question. Ignorance Whitey says I ended up asking 3 over the time you spent explaining that. Not sure if you can see them all. No, I don't think so. I'm afraid, Ignorance Whitey, I can't see all the questions. Yeah. So let's look back, right? Forex after trading, but maybe because social media team is monitoring, so it might be that there's something that I should not be answering because I have to be kept on a leash, so I don't say something embarrassing. Yeah, nobody needs that. So anyway, right, let's just go back to gold for Forex after trading. Forex after trading says gold. Oh, I've just closed it like a big doofus. Sorry, yeah, give me a minute. That's a bit too small a screen to be doing that with. Let's just give it a second to load. And yeah, so what I was saying earlier is I just don't think I would really be trading this. For me personally, I would not be planning to trade gold right now, right? But if I was to, then I would probably be more likely to buy, considering that we have a relatively high amount of buying volume, and we have, I think, what looks like a fairly strong incipient bounce. So, I mean, context, right, overall, I think the fundamentals have not significantly changed since last Friday. We had this kind of panic on Friday, and also, late on... early yesterday, and to some extent also late on Thursday. Yes, we had this kind of significant panic. Kevin Walsh is Donald Trump's nominee for the next chair of the Fed, and that might mean fewer cuts, but I think it's far too early to speculate with any reliability on that. So I just think that the downward movement recently is overblown, and there seems to be some evidence of ongoing demand to buy. I don't think the core fundamentals have really changed a lot, as we discussed earlier. Fed Watch isn't showing anything radically different now compared to around this time last week. So that's why I would personally prefer to stay out to avoid getting whipsawed. Because what is it possibly going to look like over this week? Okay, now it's sort of bounced. It's probably going to go something like this, right? Before we get the next direction for the next several days, especially the run up to the NFP, right? But let's say I don't care about that, and I need to find a trade for this instrument. I must trade gold, which I think is a terrible approach that's likely to lead to losses. Let's just take that approach anyway, right? I would probably set my target somewhere at least a little bit below the record highs, just to attempt to some degree to try to de-risk it. So possibly within the 100% Fibonacci retracement based on the previous highs. But I think it's maybe slightly more conservative, I go for about 5,000. But then how to find a good ratio here? I mean, it's very, very difficult to find a reasonably good ratio here. Possibly somewhere around this 20 SMA. I don't really like that at all, everybody, to be honest. 4,870-ish. I think it's really too tight. And it's not a great ratio either. But let's just say that we're doing that, right? I mean, I'm not mad on that at all. I would definitely not do that. But I think maybe that, based on what we see now, at least that's perhaps slightly more likely to succeed compared to selling. Just my opinion. I would just say, apart from the reasons that I've stated already for why I would not do that, I would just stay out of this for a while. NFP coming up on Friday too, and just to kind of psychological pressure of seeing the size of these candlesticks. I'm going to be tempted, if this was a live account, which I would stress it's not, it's a demo account. If this was a live account, I'm going to be wanting to check this constantly, check it all the time, like, oh, what's it doing? Is it losing loads of money? Oh no, etc., etc. I don't really want to do that. I prefer just to put my feet up tonight and have a cup of tea. So loads of reasons why I would not do that. But broadly speaking, I think for right now, at least, if you have to make a trade, maybe it seems to be more positive based on both the fundamentals and the current technicals. I would just massively prefer to wait out. Yeah, Forex after trading. Yeah, gold does play with our emotions. Yeah, that's absolutely right. Especially in this situation, when you've got this kind of chart and you see the size of these candlesticks, like on the daily time frame, and knowing the point profit, even for the smallest possible volume that you could trade, the value of a pip for gold was really high compared to Forex. So it just seems to make sense to me, live to fight another day. No position is a position. It's a cliche, of course. Yeah, of course, too big is hell. Yes, you're right. Depends on the time frame. Yeah. Forex after trading says too big stop. Yeah, you're absolutely right. But I think it depends on the time frame. And I think in this situation, if we're trying to, one approach to calculating it anyway is, I don't know why that changes to that stupid colour. Just give me a wee second here. One approach, right, is I think to kind of sort of de-risk such a trade in this situation is to try to use ATR as at least a guide, right? So that's another of the reasons why I would absolutely not trade this medium or long term right now, because usually for ATR, if you set the stop on the time frame that you're trading, if you set the stop less than 1.5 ATR from the price of entry, it's practically guaranteed to trigger within the next 2 to 3 periods. And it's like, look, you can't use a $300 stop for gold in this situation. It's not going to work, right? It's just far too far away. So that's why another reason why I think it's better just to wait and come back to it later. Is that boring? Yes, it's boring. It is boring, but it's less stupidly risky, in my opinion. I stress just my personal opinion. You're allowed to disagree, of course. So, where are we? Yeah, if there's any more questions, I know we're about to run out of time. If there's any more questions, please by all means ask any questions that you might have. And in general, I would encourage you, please follow me on X, which is at mstarkexness. So you follow me on X, and I'm writing, some various ideas. Obviously, these ideas don't work anymore, but there's some ideas which can work for a longer period, and also some, tips and information and discussion and commentary and so on here. And you can also follow various. You can follow various of my colleagues, including the market strategists. It depends on your region and various other things. Follow Crisada, follow Terence, Inky Datong, and the trading trainers is also Heikel and so on. There's my immediate team, my colleagues Stan and Andres. You can follow them. Most of us are to some degree active on Twitter. Exness, of course, on Twitter. And YouTube, where you're currently watching. Currently watching on YouTube, please subscribe, turn on notifications, so that you're aware when the live streams are coming. You don't like Andreas's live stream or my live stream, that's fine, don't watch it. You can watch Kojo's live stream as well, which is very popular. Usually Kojo will be streaming on Wednesdays, but in some cases he will not be there on a particular Wednesday. I don't know his schedule, but if you have notifications on, then you should be notified immediately as soon as Kojo is starting his stream, and that's always a popular one. Yeah. So ForexR Trading says, Sir, I like scalping. Which time frame better, 15 minutes or 5 minutes? I think it really depends on how aggressive you are. My personal preference for momentum scalping, so to speak, would probably be 15, and my preference for new scalping would probably be 5. But in general, I don't really scalp. I'm not really the person to ask about that. Excuse me. Sometimes do scalp the news, but I generally don't. Scalping momentum, almost never do that. So 10 minutes is obviously not a very useful time frame. Nobody much has that, so just give us a second to load. 15 minutes, of course, is going to be a little bit more reliable, but it means that as a scalper, you're going to miss a bit of the action, compared to if you're trading on 5 minutes. So that's kind of a compromise. That's just what has generally worked reasonably well for me in the past. But scalping, I personally don't like to do it very much. Usually prefer to swing a position trade. Sometimes day trade, yeah, but rarely. I usually prefer to swing a position trade, yeah. But I would say it depends on the type of scalping. Short answer, 5 minutes for new scalping, 15 minutes for momentum scalping, usually. Would have done it in the past. So thanks, ForexR Trading for the question. So I think that's about it. We're pretty much out of time. So I would just say thanks very much, everybody, for participating. Thanks very much for all the questions. And next week it will be me again on Tuesday, because Andres is currently on leave. So please join us again. If you have had a good stream, join again next week. Or even if you hadn't had a good stream, then leave a comment saying why it was bad, and we can figure it out. We can definitely improve in the future, and we can certainly try to. And hopefully Kojo will be here, if not tomorrow, then next week on Wednesday. You join Kojo's stream. And in the meantime, you can follow us on YouTube. You can check out the various things we're publishing on YouTube, including the trade of the week, which sneak preview is going to be about oil. Should be released tomorrow morning. And you can also follow us on X. You can follow us on TradingView, Central Charts, various other different places you can get in touch. Yeah. And so hopefully see you next week. In the meantime, I wish everybody a good NFP. Successful and responsible trading, and remember, in this kind of situation in markets, I think it's preferable just to kind of take a little bit of a step back, analyse carefully before we make jump to any snap decisions. So thanks very much for joining. Hopefully you've had a good stream, and see you next week. Some of you certainly see you next week, some of you perhaps not, but everybody, thanks for joining. Yes. and successful, responsible trading, hopefully. And goodbye.